On paper, the United States holds 8,133 tons of gold, the world's largest reserve, valued at over $600 billion. Fort Knox is legendary. The system seems solid. But what if I told you the biggest gold heist in history wasn't committed by masked thieves with guns, but by governments with pens? And what if it's still happening right now, hidden behind central bank policies and economic jargon? That's exactly what the data shows. Hey everyone, welcome back. Quick reminder, I'm not a financial advisor. This is educational content based on historical economic data and monetary policy analysis. Always do your own research and consult licensed professionals before making financial decisions. Today, I'm going to show you how governments have systematically manipulated gold for over a century, confiscating it from citizens, breaking promises to foreign nations, and creating paper markets that dwarf physical supply by over 100 to 1. Let's get started. For most of human history, money wasn't an abstract concept. It was physical metal. Under the classical gold standard from 1870 to 1914, major currencies were directly backed by fixed amounts of gold. In the United States, the official rate was $20.67 per ounce of gold. This wasn't symbolic. You could walk into a bank with paper currency and demand the actual gold it represented. Banks were legally required to give it to you. In 1913, before the Federal Reserve was created, the U.S. money supply was approximately $11.6 billion, backed by gold reserves of roughly 1,924 tons. This system enforced strict monetary discipline. Governments couldn't simply print unlimited money because every dollar needed gold backing. But World War I changed everything. Between 1914 and 1919, every major European power suspended gold convertibility to finance the war. They stopped redeeming currency for gold and printed money to pay for military expenses. By November 1923, Germany's hyperinflation required 4.2 trillion marks to equal $1. The lesson governments learned wasn't don't abandon gold backing. It was control the gold itself, and you control the narrative. April 5, 1933. The United States was deep in the Great Depression. Unemployment exceeded 25%. President Franklin D. Roosevelt issued Executive Order 6102, making it illegal for American citizens to own gold coins, gold bullion, or gold certificates. American citizens were required by law to turn in their gold to the Federal Reserve by May 1, 1933, receiving $20.67 per ounce in exchange. Failure to comply carried penalties, up to $10,000 in fines, equivalent to $230,000 today, or up to 10 years in prison. According to Federal Reserve records, approximately 300 tons of gold was turned in by American citizens during this confiscation period. Now here's where it becomes a heist. Just 8 months later, the Gold Reserve Act of 1934 officially revalued gold from $20.67 to $35 per ounce, a 69% increase. Think about what actually happened. The government forced citizens to sell gold at $20.67, then immediately revalued their own gold holdings to $35. Overnight, the U.S. Treasury's gold reserves increased in dollar value by nearly 70%, not because they acquired more gold, but because they changed the accounting. Before revaluation, U.S. gold reserves valued at $4.03 billion after revaluation. Same physical gold worth $6.81 billion paper profit created by decree, $2.78 billion. American citizens were legally robbed of that 69% appreciation. This wasn't market economics. This was confiscation disguised as monetary policy. By the end of World War II, the United States held approximately 20,000 tons of gold, roughly 60% of the world's entire official gold reserves. 1945 gold reserves, United States 20,000 tons, 60%. All of Europe combined and LT, 5,000 tons. This allowed the U.S. to write the rules at the 1944 Bretton Woods Conference. The agreement was simple. The U.S. dollar would be pegged to gold at $35 per ounce. All other currencies would peg to the dollar. Foreign central banks could redeem dollars for physical gold at any time. This made the dollar the world's reserve currency. But there was a requirement. The U.S. had to maintain enough gold to back the dollars circulating globally. Through the 1950s and 1960s, America spent beyond its means, financing the Korean War, Vietnam War, the space race, and massive domestic programs. Dollar flooded overseas. By 1960, foreign government dollar claims $18.7 billion U.S. gold reserves at $35 per oz, $17.8 billion result. Foreign claims exceeded gold backing for the first time. French President Charles de Gaulle noticed. In February 1965, he announced France would convert its dollar reserves into gold. In 1965 alone, France redeemed $300 million for physical gold. Other nations followed. To stem the bleeding, the U.S. and European nations formed the London Gold Pool, selling gold to suppress prices. Between 1961 and 1968, the London Gold Pool sold approximately 1,400 tons of gold, trying to maintain the $35 price. In March 1968, the gold pool collapsed. U.S. gold reserve decline. 1945, 20,000 plus tons. 1971, 8,800 tons. Then came August 15, 1971. President Nixon appeared on television and announced the U.S. would temporarily suspend dollar-gold convertibility. This was effectively a default. The U.S. kept the gold. Foreign nations kept their now-unbacked dollars. The Bretton Woods system was dead. At time of Nixon's announcement, foreign government dollar holdings, $50 billion. U.S. gold reserves at $35 per oz, $10 billion. Coverage ratio, only 20%. The U.S. couldn't meet obligations if everyone demanded redemption. The temporary suspension became permanent. It's been over 50 years. No major currency has been backed by gold since. After 1971, economists declared gold a barbarous relic. But governments didn't abandon gold. They just changed how they controlled it. Today, gold prices aren't determined by physical gold changing hands. They're set by derivatives trading, futures contracts, and paper instruments promising future gold delivery. According to the Bank for International Settlements, daily gold derivatives trading volume can exceed 20 to 30 times the entire annual physical gold mining output. London Bullion Market Association, daily clearing volume, 18 to 20 million ounces. Actual physical delivery, less than 1% of traded volume. This means paper promises to deliver gold far exceed the physical gold that exists. Estimated paper to physical gold ratio, 50 to 1 to 100 to 1. The gold price you see isn't driven by actual gold supply and demand. It's driven by trading of contracts that mostly never result in physical delivery. April 2013 example. Paper gold selling equivalent, 400 tons in 2 days. Percentage of annual mining, greater than 10%. Gold price crash, 13%. Physical demand response, actually increased China and India. The price crashed not from physical fundamentals, but from paper market dynamics. It's modern price suppression without moving actual metal. Here's where it gets interesting. While Western media said gold was irrelevant, central banks, particularly in Asia, were accumulating gold at historic rates. World Gold Council data, 2022, central banks purchased 1,136 tons, highest since 1967. 2023, central banks purchased 1,037 tons, second highest on record. 2-year total, 2,173 tons, 85% of annual global mining production. Who's buying? China official reserves, 2015, 1,054 tons. 2024, over 2,260 tons. Estimated actual, including unofficial, 3,000 to 4,000 tons. Russia official reserves, 2007, 400 tons. 2024, over 2,330 tons. India official reserves, 2015, 558 tons. 2024, 800 plus tons. Meanwhile, The UK sold 395 tons between 1999 to 2002 at around $275 per ounce. UK gold sale analysis. Sale price 1999 to 2002 $275/Oz current price. $2 600/Oz price increase. Nearly 10x opportunity cost. $29.5 billion. Why are central banks accumulating gold if it's supposedly irrelevant? Because they understand it's insurance against monetary instability and geopolitical uncertainty. Here's the uncomfortable truth. There hasn't been a comprehensive, independent audit of U.S. gold reserves since 1953, over 70 years ago. Germany gold repatriation. Amount requested, 674 tons from New York and Paris. Year requested, 2013. Year completed, 2017. Time required. For years to transfer gold supposedly sitting in vaults. For a $600+ billion asset backing global monetary confidence, the lack of modern independent verification is extraordinary. Why does this historical gold manipulation matter today? Because the same patterns are repeating. Current economic context. U.S. national debt. Over $36 trillion. Debt to GDP ratio, 130%. Global debt exceeds $315 trillion. Federal Reserve balance sheet expansion. 2019, $4 trillion. 2022 peak, $9 trillion. We're living through the largest monetary expansion in human history. What's happened to gold prices? Gold price history. 2000, $280. 2008, $870. 2020, $1770. 2024, $2600. That's not gold becoming more valuable. That's currencies becoming less valuable. Central banks are accumulating gold while managing paper gold markets to prevent prices from signaling loss of confidence in fiat currencies too quickly. Historical pattern, gold reserve shifts. Spain's empire, gold flowed out, empire declined. Britain's dominance, gold reserves depleted, lost reserve currency status. America's position, 1945, 20,000 tons. 2024, 8,133 tons. Current status, unsustainable debt levels. The historical pattern repeats. Gold drains from declining powers and accumulates in rising ones. Now gold flows east to China, Russia, India, as they reduce dollar dependency and build alternative payment systems. Monetary history is filled with moments where rules suddenly changed. 1933, gold ownership became illegal overnight. 1971, dollar gold convertibility ended with zero warning. The key lesson: money promises are only as strong as the system behind them. When stability breaks, the rules change, usually to protect institutions, not individuals. I'm not trying to create panic. I'm trying to create awareness. Understanding the historical pattern of monetary manipulation gives you context most people lack. If you found this valuable, hit that like button and subscribe and more.